We're analyzing BioNTech stock ticker BNTX to see if it's a great business on sale. We're using the Select 6 analysis to look at the most telling financial metrics before estimating a fair value for BioNTech. Then we're giving a final rating to the business. This analysis is around 10 minutes. It's going to be intense, but it's going to be worth it. Before we get into these valuable metrics, let's understand BioNTech stock performance. Right now, BioNTech trades for $105.01 per share. Year to date, their stock price is down 29.5%. They went public just under 4 years ago. In that time, their stock price is up more than 700%. They're compounding at 74% annually. That's even with the companies down 75% from their all-time highs in August of 2021. Due to their vaccine collaboration with Pfizer, BioNTech was one of the darlings of the 2021 bull market. Right now, BioNTech trades just $5 above their 52-week low. The company's down $84 from their 52-week high. Around 1% of their shares are sold short. BioNTech's a big business. They have a $26 billion market cap. But the burning question is, with BioNTech down so much from their all-time highs, is the business on sale? BioNTech is a German-based biotechnology company that focuses on developing cancer therapeutics, including individualized immunotherapy, as well as vaccines for infectious diseases. The company's oncology pipeline contains several classes of drugs, including mRNA-based drugs to encode antigens, neoantigens, cytokines and antibodies, cell therapies, biospecific antibodies, and small molecular immunomodulators. BioNTech is partnered with several large pharmaceutical companies, including Roche, Eli Lilly, Pfizer, Sanofi, and Genmab. Comirnaty, their COVID-19 vaccine, was its first available commercialized product. Now with that understanding, let's get into the numbers. BioNTech has both a limited track record as a public business. Since going public, they saw their first commercial success. This is going to be reflected over and over again in their numbers. Metric number 1, we want their average return on capital in the last 5 years to be above 14%. The average business earns 7% returns on capital. Looking for a benchmark that's double this can build in margin of safety based on the quality of the business. We're using BioNTech's numbers both as a public and a private company here. We get to see firsthand the huge spikes that pharmaceuticals and biotechnology companies can have when they hit product success. BioNTech earned negative returns on capital until 2021. In that year, they earned 120% returns on capital. That's insane. Since then, these returns have been declining. They earned 59% in their last fiscal year. In their last 12 months, they earned 39%. When these are averaged out, however, BioNTech's earning 22% returns on capital in a given year. Even though these have been very lumpy and were negative for most of this time, this is a check on metric number 1. These are still 3 times better than an average business. Metric number 2, we're looking for growth to go along with their high returns on capital. Right off the bat, their growth has been outrageously huge. Their earnings were negative in 2 of these 5 years, are very positive today, and their free cash flows are up very big as well. They've been free cash flow positive in each of their last 2 years and in their last 12 months. This is massive growth for BioNTech as they had their first viable product, an insanely huge check on metric number 2. Metric number 3, we're looking at BioNTech from the view of an individual shareholder. We want to see earnings per share growth in the last 5 years. We just learned their net incomes or their earnings have been up huge. At the same time, when they went public, BioNTech diluted shareholders in their public offering. But since 2020, the company's actually been buying back shares. They bought back around 1% of shares outstanding over this time. This huge earnings growth is going to outpace any shareholder dilution they may have had, even through their public offering. This is a big check on metric number 3. Metric number 4, we're looking for something similar and we're going to get a similar result. We want to see 5-year free cash flow per share growth. With their free cash flows now positive, this significantly outpaces any shareholder dilution they may have had. This is a check on metric number 4. To recap where we stand currently, BioNTech is perfect through our first 4 metrics. Can they keep this up? But there's still one vital piece missing. You might think nailing returns on capital and having great growth is the key, but we haven't touched on the one thing that I believe sets BioNTech apart, which is having these characteristics without using a lot of debt. Metric number 5, we want BioNTech's net debt, which is their total debt minus their cash and their short-term investments, to be below the sum of their free cash flows in their last 5 fiscal years. BioNTech has had negative net debt in all 5 of these years, meaning they have cash left over after paying off their debts. They stored away their huge free cash cash flows from last year and have most of this on their balance sheet as cash. Right now, BioNTech has $13 billion of cash on their balance sheet after ending last year with $14.8 billion. They also generated $14.6 billion of free cash flow in their last 5 fiscal years, most of that coming in their last 2 fiscal years. This is a huge check on metric number 5, as the company has a cash cushion and they're cash flow positive. In their last 12 months, BioNTech generated $9.2 billion of free cash flow. It's great to see the company's financial strength. Flawless through our first 5 metrics, does BioNTech have what it takes to be a perfect Select 6 stock? Let's find out. The big metric of them all, metric number 6, we want BioNTech's average 5-year free cash flow divided by their enterprise value to give us a yield that's above 5%. If this is the case, this gives a slight risk premium to the yield of the 10-year treasury. It's the first of 2 different ways we're estimating a fair value for BioNTech. Right now, BioNTech has a $12.5 billion enterprise value. This looks at the company from the view of an individual shareholder by accounting for both their market cap and their net debt position. In the last 5 years, BioNTech generated $14.6 billion of free cash flow. While their free cash flow has spiked recently and they haven't been anywhere near their average in any of these fiscal years, BioNTech generates $2.9 billion of free cash flow in a given year. Again, that's significantly smoothing their results. When that's divided by their $12.5 billion enterprise value, it gives us a 23% average free cash flow to enterprise value yield. On a current basis, BioNTech generated $9.1 billion of free cash flow in their last 12 months. When that's divided by their enterprise value, it gives us an insane 73% current free cash flow to enterprise value yield. BioNTech is massively cash flow generative compared to their enterprise value. The big concern with this company is, are they a one-hit wonder? Right now, their COVID vaccine is their only commercialized product. Based on their financial history as a business, this is an insane check on metric number 6, meaning BioNTech has done it. They're a perfect Select 6 stock. Don't just run out and go buy the business. We still need to estimate their fair value per share and give our final rating. Everything we've discussed so far is important, but there's something missing that, in my opinion, is the main reason to analyze BioNTech, which takes us on to using a discounted cash flow model to estimate their fair value per share. A DCF model is based on the predictability of a company's free cash flows. Like any model in any discipline, its outputs are sensitive to its inputs. BioNTech's going to have a very low degree of business predictability, will be a very, very rough estimate for the business. This is due to their nature as a biotechnology company, their huge growth, and their lack of a public track record. Please take this as a ballpark estimate only. You need to dig in and validate any of the assumptions we're using. We're starting with an average of BioNTech's last 3 fiscal years worth of free cash flow, then using assumptions where these free cash flows are declining into the future, assuming these free cash flows decline at 5% annually for the next decade. Then in the following decade, assuming they decline at 10% annually, we're adding in the company's tangible book value to give an estimate of their net worth. If we want a 15% rate of return, which is what Warren Buffett looks for from his investments, at today's valuation multiples, if these are the same 20 years into the future, an estimate of BioNTech's fair value per share is around $177. That's well above their current stock price. Again, this is a very rough estimate. It's not financial advice. BioNTech only has one commercial product, its COVID-19 vaccine with Pfizer. The main concern is that this company's a one-hit wonder. They won't be able to sustain their success or have success with the rest of their pipeline. The company's boomed very dramatically recently. Even in the last couple of years, the company's free cash flows are on a very sharp decline. Most importantly, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. In just a minute, we'll give our final rating to BioNTech, but we need to address something first. We've covered the numbers, but the qualitative factors may be even more important for their business. What are they? Well, let's find out. Starting with the factors supporting a long thesis, number 1, the rapid development of COVID-19 vaccine Comirnaty bodes well for the rest of BioNTech's pipeline and the future of its mRNA research platform. Number 2, BioNTech may be able to command a premium price with its personalized cancer therapies if successful. Number 3, BioNTech's pipeline, which relies on expertise in mRNA and bioinformatics, may be difficult to replicate by competitors. But we'd be remiss if we didn't cover the negatives of the business as well, looking at the factors supporting a short thesis. Number 1, the intense focus on the COVID-19 vaccine could delay the development timeline for the rest of BioNTech's pipeline. Number 2, depending on the pandemic's evolution, the company may not be consistently profitable in the future, potentially burning cash from COVID-19 vaccine sales as it develops several assets simultaneously. Number 3, BioNTech's technology is still relatively relatively new, with no oncology approvals to establish use in this setting. BioNTech also recently completed their acquisition of InstaDeep. There you have it for a balanced perspective of some of the qualitative factors of their business. Now it's time to give our rating. In analyzing BioNTech, stock ticker BNTX, we learned this biotechnology company has grown extremely rapidly in the last few years. Alongside Pfizer, they were one of the first companies to market with a COVID-19 vaccine, which was their first commercially viable product. This resulted in a huge spike in their financials, where they've earned huge returns on capital, they've experienced huge growth, they've even started to buy back some shares, they have a large cash position on their balance sheet, they generate a lot of free cash flow, even though that's declining as COVID-19 vaccine demand wanes. It's worth reiterating this analysis is not financial advice. BioNTech's free cash flow to enterprise value yields are huge compared to the yield of the 10-year treasury. They look potentially very attractive. When we performed our discounted cash flow analysis, if today's valuation multiples are the same 20 years into the future, you believe those assumptions and you want a 15% rate of return, an estimate of BioNTech's fair value per share is around $177. The company's traded down since then, but they were last around those levels in December of 2022. Their current stock price is well below that fair value, potentially building in margin of safety for the company. Again, this is not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. Looking at all the factors of our analysis, BioNTech looks like an excellent candidate for further research. Dig into this company if you're interested. If you enjoyed today's video, be sure to like it, subscribe to the channel for more stock analysis videos, share your thoughts on BioNTech, and let me know what business you want me to look at next in the comments below. Thanks for learning about BioNTech with me, and have a great day.